Good afternoon, everyone. Namaskar, Sat Sri Akal. I welcome you all in our revisionary class, which is regarding capital gain, and we will also cover today the revisionary class of income from other source, which is our last head of income. So I believe आप सभी लोग बहुत मेहनत कर रहे हैं अपने एग्जाम के लिए पढ़ाई पूरे
Recording in progress.
and I believe that will be going to pay back after your examination when your result will come. So in the last class, we have discussed the provision, the revisional topic of income under the head capital gain. And today, we will cover that topic also. We'll complete that capital gain topic as well as we will complete the income from other source provisions also. Okay. In the last class, we have all done the basic provisions of capital gain with the help of MCQs. We have covered the, I guess, May 2024 question and MTP question also. Now we have left with capital gain November 2020 third question also. We will cover that. And May 23, November 23, May 24, we have already covered. So without wasting much time, let's get started. There is some amendment provisions also under income from other sources. The amendment has been discussed in the normal class, that is regarding the consideration received against the LIP policies, life insurance policies, except the ULIP plan and Keyman insurance policy. So we have the provision already regarding that amendment, and we have discussed that amendment in our normal classes already. But now we have a clarification from CBDT. The certain circulars are there in which it has been explained that how that calculation should be done, what amount is going to be taxable and what amount is not going to be taxable when we received consideration against our life insurance policy. So very important provisions are there. We will discuss all those provisions one by one, and that is under the head income from other sources. Okay. So good afternoon, Sujaya. Good afternoon, Om Krishnan. Okay. So let's get started. First of all, we should cover the MTP question of capital gain. Okay. So the question number capital gain Give me a second. Yes, question number 1, point number 6. Okay, that is the solution part. Just a minute. This is question number 1, 6 part. So here you can see, this is we are going to discuss. The question is, he also sold, we are talking about an assessee, the information regarding his income has been given over here. That is Mr. Sunil, age 48 year, a resident Indian, has furnished the following particulars for the year ended on 31st March 2024. So point number 1 is for some other income. Point number 6 is related with income under the head capital gain. Now the question is, he also sold his vacant land on 1st December 2023 for rupees 15 lakh. Fine. Whenever there is immobile property involved under a capital gain question, or under PGBP. So always recall the provision of section 50C or section 43CA. Because there are certain provision regarding the stamp duty value, and this is also going to be applicable in case of income from other source provision. When you received a property without consideration or inadequate consideration, in that case also stamp duty value has its role in income from other source. So whenever there is an immobile property, whether land and building or land or building, so always focus that in this situation the stamp duty value is going to play a major role. Okay, so now we are talking about the immobile property. 15 lakh rupees, he sold that property. The stamp duty value of land at the time of transfer was 16 lakh. Because we are discussing capital gain provisions, so consideration would be find out as per section 50C. So the stamp duty value is 16 lakh. This land was acquired by him on 15/10/1998 for rupees 2.8 lakh. That means before 2001. The FMV of the land as on 1st April 2001 was 4.8 lakhs, and the stamp duty value on the said date was 4 lakh rupees. So you can see the fair market value and the stamp duty value both has been given as on 1st April 2001. Why? Because in case of immobile property, the FMV cannot exceed the stamp duty value on 1/4/2001. That means in case of finding out the cost of acquisition of an immobile property, the stamp duty value and the FMV need to be compared, and lower will be treated as your cost of acquisition. He had incurred registration expenses of 12,000 at the time of purchase, of course. The cost inflation index has been given in the question of 348 and 100. Now we have to calculate the capital gain in this question. So you can see a very simple question. Basic capital gain question is there. There is no provision regarding the transfer. There is no provision regarding the compulsory acquisition, conversion, etc. It's a basic capital gain question. So I was talking about these kind of question in last session also. You should try that this kind of question should be solved correctly. There should not be any mistake in this kind of easy points, whether it's a complete individual question of 3 or 4 marks, or whether it's a part of your a long question. Like in this question, the question is having 15 marks. But I believe that point number 6 must have at least 3 or 4 marks individual treatment. Okay. So of course, we do not need to write it down the assessment year, assessee. We all know that how to format that question. Then now we need to find out the sale consideration. So what is going to be the sale consideration in this case? The provisions say that the stamp duty value exceed 110% of consideration, then stamp duty value would be the sale consideration for the purpose of capital gain under section 50C. And if otherwise, then the normal consideration would be treated as sale consideration. So now you can see in this example, 15 lakh is the consideration, and 110% of 15 lakh would be more than the stamp duty value. So stamp duty value does not exceed the 110% of consideration. So we will take the consideration as the sale consideration in this question. That would be 15 lakh rupees. I hope it's clear. Now we need to find out the index cost of acquisition, because the asset is long-term capital asset. For the purpose of that, we need to know the purchase price of that property, because it has been purchased before 1401. And the purchase price has been given in the question is 2.8 lakh. This needs to be compared with the fair market value as on 1401. And the stamp duty value also has been given. So that means technically, and you can see the purchase cost was 280 plus 12,000 rupees, which has been incurred at the time of registry. So technically it was 2.92. Now the FMV and SDV. FMV cannot exceed the stamp duty value. So the FMV has been given 4.8 lakh and stamp duty value has been given 4. So lower would be considered as the cost of acquisition for the purpose of this question. So that would be 4 lakh. Now 4 lakh into 348, because whichever is higher is going to be your cost. So 4 is higher after comparing with the purchase price. So we will find out the indexation apply, and this going to be my index value, that is 13.92 lakh. So long-term capital gain would be 1,08,000 rupees. Clear? So that was a question of capital gain MTP provision, what we just discussed. Okay. Now moving on to solve November 2023 question of capital gain. Why I am trying to solve the questions which has been asked in your past year examinations, because that will give you a confidence that these are the questions which belongs to the examination paper. So these are not that difficult. So why we fear from the examination questions? It's just because it is exam. So we find it that examination question would be more difficult. No, it is your the way of solving that question, the way you are going to treat yourself in the examination. So if you're not nervous, if you control your senses, if you're confident about your studies, then believe me, question paper is not that difficult. Yes, there are some difficult portion also, but that would be like 15 or 20 or 25 marks. The balance 75% or 70% paper is average. So an average student who has worked hard and who had revisions of question, done practice of question, would be easily able to solve those questions, those related to that 60 or 70% portion of the examination. So do not fear, okay? Now we are going to solve the next question, that is November. So the November question number 3A related with capital gain provision. Here we have the question. Very interesting question again. And you will see this question contains 4 marks. And you will see it's not that difficult. If you will invest your 10 or 11 minutes, you will be able to solve this question very easily. First of all, let's discuss the question. Let's see what is going to be applied in this question. Let's try to understand the question first. It says, Mr. Aryan, a resident individual age 58 years, sells unlisted shares in a private sector company. So it's a good news that it's an unlisted shares. So that section 112A provision does not apply. Okay. Indexation will be done, of course. These are normal shares. Those are unlisted in a private sector company on May 17, 2022 for rupees 10 lakh. So the sale consideration has been given. The shares were brought on 1st August 2012 for a consideration of 2 lakh rupees. Mr. Aryan paid rupees 2,000 as brokerage on sale of shares. So the amount which has been incurred at a time of transfer would going to be deducted from the sale consideration. So after deducting 2,000, we will get our net sale consideration. Okay. Mr. Aryan deposit 5 lakh in capital gain account scheme. So there is now exemption concept also in this question applicable. So to solve a question having exemption provision, first of all, you should identify which exemption is going to be applicable in this question. And it depends upon what we transfer and what we purchase. So we transfer shares, and what we are purchasing, we will come to know in the later sentence, before filing of the return of income for the assessment year 23-24. So this, in the scheme, it has been deposited 5 lakh rupees, and it has been deposited before the due date of filing of ROI. So exemption would be there. The time duration problem also has been clarified in the question. Now we do not know in what exemption is going to be applicable, because we do not know what is going to be purchased from that amount. On April 30, 2024, he withdrew 4,50,000 and purchased a residential house property at Delhi on May 1st, 2024 for rupees 4,50,000. So can you tell me which exemption is going to be applicable in this question? We have transferred unlisted shares and we bought a residential house. So can you tell me which exemption is applicable? Shoaib is saying 54F. Okay. Anyone else? Ayushi, Sujay, Pooja, Sonali, where are you? What is the correct exemption in this case? Sujay is saying 54F. Yes, correct. Rishabh is saying 54F. Very well done. Correct. Section 54F is going to be applicable. The exemption of section 54F. Why? Because any long-term capital asset other than residential house, if transferred, and if we purchased or if we invest in a residential house, then this exemption can be claimed. So exemption under section 54F is going to be applicable. Fine. So we understood which exemption is going to be applicable. Inflation index is given in the question. Now ascertain the requirement of question. First one, the starting thing is to understand the question. Then the requirement of question, what they need from us to calculate. The ascertainment point number 1 says the amount of capital gain chargeable to tax for assessment year 23-24 we need to calculate. Okay. And the tax treatment with mention of relevant assessment year of the unutilized amount also we need to calculate. So the capital gain for this year and the treatment of unutilized amount in which year and what is the treatment, that should also need to be explained in the solution of question number 3. Okay. So my pen tab is not working on these question paper. They have some security issue. So we will solve it on the whiteboard. Very few information was there. So the question says it is for assessment year 23-24. Assessee was Mr. So-and-so, Aryan. And period of holding was long term. Clear? Now we need the sale consideration. In the question it has been explained and given that the consideration was 10 lakh rupees. And there was brokerage or some expenses on transfer that amounts 2,000 rupees. So that means my net sale consideration was 9,98,000. Now the purchase price has been specifically given in the question, that was 2 lakh rupees multiplied by the index of previous year 22-23 and divided by the respective index of the year of purchase. The index cost of acquisition would be 3,31,000. Now the remaining is my long-term capital gain, and that would be 6,67,000. I hope it's clear till now. Now the investment time was that at which time you need to invest in that for the purpose of claiming the exemption. So he invested in the capital gain scheme on 30th April 2024. So we are talking about the financial year, and he deposited the amount before the due date of ROI. Clear? So he deposited the amount on 15th June 2023. That is before the due date of ROI for assessment year 23-24, because it should be 31st July. So before that, he deposited the amount in the scheme. So he would able to claim the exemption as follows. Now section 54F has a unique feature to claim the exemption. All other exemption section, whether it's section 54, 54B, 54D, EC, etc. They provide you full exemption up to the amount of capital gain. If you invest 5 lakh rupees, either you will get the exemption of 5 lakh rupees or up to the amount of capital gain, whichever is lower. But section 54F is having a special unique feature that it gives you exemption on a proportionate basis. And there is a formula to calculate the exemption under section 54, which says original capital gain upon net sales consideration into amount invested. By this formula, you need to calculate the exemption amount. So technically, they are providing you exemption on the basis of investment amount proportionate to the gain, which is upon the net sale consideration. So on the basis of this formula, now we will calculate the gain. So the original capital gain is 667,000. Net sale consideration is important, that's why. We should not write it down 10 lakh, it should be 9,98,000. And then amount investment. So he invests 5 lakh rupees, I guess. Yes. So what exemption we will gain regarding that? It would be 334168. Yes, Sujay, you are correct. Is a correct formula. 1.45. So this is the exemption under section 54F, and we would have the long-term capital gain that would be 332,832. Now the interesting question what I am going to ask you is something different. Let me ask you a question from this examination question. Read it carefully. Now this line says on 30th April he withdrew 4,50,000. On April 30, 2024, he withdrew 4,50,000 and purchased a residential property at Delhi on 1st May 2024 for 4,50,000. Now the question's second point requirement is the tax treatment of the unutilized amount with the detail that in which year that unutilized amount should be taxable. So can anyone tell me in which year the unutilized amount should be taxable? Which assessment year in which this unutilized amount of 50,000 is going to be taxable, and how much? He invested 5 lakh rupees and used only 4,50,000. So balance 50,000, how much is going to be taxable in which year? So read it carefully, recall the provision. What are the provision regarding this? The provision regarding if the unutilized amount has not been utilized, then when it is going to be taxable? According to that provision, you need to find out the assessment year in which this should be taxable. Okay. Arun Jain is saying assessment year 25-26. Rishabh is saying will be taxable in the same year. What is the same year, Rishabh? Please write it down the answer in the form of assessment year. What assessment year it should be to tax this unutilized amount, and how much also? You should have a paper, pen, and a calculator always whenever you're taking these practical question classes. Rishabh is saying formula original capital gain upon net sale consideration into unutilized amount. Yes, Rishabh, you are correct. I just want to know the assessment year. Which assessment year? Sujay is saying assessment year 24-25. Okay. Anyone else? Ayushi is saying assessment year in which he withdraw the amount. I want the year. Kindly write it down, the assessment year, whatever it is, in your answer. Rishabh is saying 24-25 assessment year. Ayushi, I want the assessment year. These kind of answer would not be acceptable. Okay. Pooja is saying after 3 years from the end of the transfer. So Pooja is saying assessment year 26-27. Malu is saying 24-25. Ayushi Mehta is saying 24-25. You should apply the provision. Chalo, I am telling you the provision. Now implement that provision. The provision says if the unutilized amount has not been utilized within 3 years from the date in which transfer took place, then the unutilized amount will be taxable in the year in which that time duration has been elapsed. So according to this provision or the language, which year should be the assessment year in which that amount is going to be taxable? Rishabh is now saying, sorry, assessment year 25-26. Are you sure, Mr. Rishabh? The correct answer is assessment year 26-27. Only one student, that was Pooja. She gave the correct answer. Assessment year 26-27. How? We should read the provision carefully and then implement it. The provision was 3 years from the date of transfer. So you can see the date of transfer is May 2022. So it's 2023, 2024, and 2025. So that is technically the year in which the 2025, the time duration will over. So the assessment year would be 2026 and 27. So in previous year 24-25, the 3-year time duration will be ended on May 2025. So that is a previous year 24-25, so 25-26, and the assessment year would be 26-27. So assessment year would be 26-27, in which this balance amount is going to be taxable. How much amount is going to be taxable? That is a very simple. That formula again is going to be utilized to calculate the amount of exemption, amount of taxability of unutilized amount. Taxable unutilized amount. So undetermined what 50. The formula will remain the same. Original capital gain upon net sale consideration into unutilized amount. So that would be 6,67,000 multiplied by 50,000. So that will come 33,416. Clear? And that would be assessment year 26-27. Because 3 year would be end in May 2025. So May 25 would be previous year 25-26. So what did the assessment year for taxability of that unutilized amount would be 26-27. I hope it's clear now. So that was our November 2023 question, what we just completed. Now we are moving on to income from other source concept. So the provision of income from other source says the charging section 56 says those income, those does not included in any other head of income and chargeable to tax. That is going to be taxable under the head income from other sources. Okay. So the provision is just simple that any income, those are not already included in any other 4 heads of income like income from house property, capital gain, PGBP and salary. And if that is going to be chargeable to tax, then it is going to be chargeable to tax under income from other source. The income from other source having a very special characteristics, or you can say there is no format like salary having a format of solution, income from house property having a specific format of solution, income from PGBP having a certain sort of format to solve a question, and even capital gain is having a format to solve a question, but there is no as such format for income from other source. There could be variety of income like dividend income, interest income, casual income, deemed dividend, gifts, etc. And generally they do not have any specific format also. There is having a universal rule that whatever the amount of receipt, and if there is any expenses which is allowed, you need to deduct that expenses out of that income, and that remaining will be your income from other source. So all these provision has been discussed in detail in the normal classes, like deemed dividend under section 222A, B, C, D, E. We have discussed each and everything in our normal life classes with example also. A provision that is connected with gift provision, that I am going to discuss again with the help of a chart, with the help of a diagram, because in my opinion, that gift provisions are utmost important under this chapter. So when I'm saying gift provisions are utmost important in this chapter, so if somebody is hearing like this, that sir is saying only gift provision need to be prepared for examination. So let me correct you. No, everything is important. Even deemed dividend is very important. But gift provisions are more important. So, and they are technically more important due to the practical aspects from this chapter. So the question could be framed on the basis of deemed dividend either or the gift provision. So these two provisions having some practical aspects. So that is a chance that they could be asked mostly in the examination as a practical issue or practical problem. Casual income, etc., those all have been included in this case, but we are discussing the gift provision, like we have already gone through with the provision of advance money forfeited. Section 51 of capital gain deals with it, and it says if advance money has been forfeited, then up to, I guess, 2014, it has a treatment under the head income from capital gain. It should be deducted from the cost of that asset at the time of transfer. That's the old implication. But the new implication says from assessment year 15-16, if any advance money has been forfeited against any capital asset, then the amount so forfeited is going to be taxable under income from other source in the year in which the amount has been forfeited. Fine. Now, these are implication of income tax on gifts. So gifts could be monetary or gifts could be non-monetary. Under non-monetary, we have immovable properties and some other also asset has been considered, which would be regarded as gifts under this head. And that is going to be taxable under certain circumstances. So we have multiple provision. There are certain assets, only those would be considered under that income from other sources if those asset has been received without consideration or inadequate consideration. So assets may we have movable asset and immovable asset. We have a specific asset which has been included for the purpose of gift provision. If we received any asset other than these movable asset or immovable, then it would be out of the purview of income from others provision or taxability provision. Like what assets has been included, that is shares and securities, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art or bullion. So these 8 assets are movable asset. So if you receive, from the point of view of receiver we are discussing, so if you receive any asset, those 8 specific movable asset and immovable asset, land and building. So technically we are saying we have 9 assets. So if you receive any one of these 9 assets, only in that case, even without consideration or inadequate consideration, only in that situation, that is going to be have implications of income from other source. If we receive a car in a gift without consideration from anyone, then that is not going to be taxable under income from other source. So that is tax-free technically. Clear? So any other asset except above is outside the purview of income from other source if given without consideration or inadequate consideration. Moving ahead, now we have the provision that how and when it's going to be taxable under different circumstances. So what are the provision regarding it? We are going to discuss. We are going to learn that provision with the help of a chart. So that will be really easy for all of you to understand that with the help of a diagram. Here we go. There are gift provision. And gifts are divided into two categories. One would be monetary, and others are non-monetary. Non-monetary gifts are divided into further sub-classification, which is immovable asset, that means land and or building. Clear? And other A8 assets like shares, securities, bullion, etc., jewelry, archaeological collection, etc. That has been mentioned earlier. We have just seen with the help of that provision. Now we have the separate provision for monetary asset as well as the separate provision for non-monetary asset. So first of all, we are discussing the monetary asset and we have exceptions also. If the gifts has been received from relative, non-taxable. If the gift has been received at the time of marriage from anyone, non-taxable. If gift has been received by way of will, etc., non-taxable. And also there are some more cases in which the gifts, whether received monetary or monetary, does not tax it. So the monetary provision says if any person, if any amount in aggregate, if any amount in aggregate exceeded 50,000 rupees in a previous year, received from one or more person, then that whole amount, remember that whole amount, not the amount exceeding 50,000, the full value, the whole amount is going to be as income from other sources. Like there is Mr. A, he received monetary amount of 20,000 rupees from 4 people. 20,000 from Mr. B, 20,000 from Mr. C, 20,000 from Mr. D, 20,000 from Mr. E. So technically he received 80,000 rupees in a previous year in aggregate as a gift. So because the amount exceeding 50,000, so the full value is going to be income from other source, that is 80,000 is going to be the income from other source in the hands of Mr. A. So the monetary provisions are really easy. They're not complicated at all. They're very, very easy to understand and even apply the provision in the examination. The main concept, the main problem, or you can say the main complexity reside with the provisions of non-monetary assets. So what these non-monetary assets says, in case of immovable property, and if you have land and building, or land or building, or we have immovable as we received immovable asset, then there are two situations. Whether we are receiving them as without consideration, that means absolutely we are not going to pay anything. So suppose we are receiving a property of value 50 lakh rupees and we are not paying anything. So that would fall in the category of without consideration. And if we are going to pay some amount, we are not paying the full value, we are getting the benefit, but we are underpaying. So that would be called inadequate consideration. Suppose for a 50 lakh rupees property, we are going to pay 30 lakh rupees. Then that will fall in the inadequate consideration case. So that would be 20 lakh. The remaining would be or could be my income from other source depending upon other conditions. So what are the condition, etc.? So if the property is without consideration, the provision says, again that value, it's very important, the stamp duty value. If the stamp duty value is exceeding 50,000 rupees, 50,000 rupees, then whole amount would be income from other source. Always remember, if stamp duty value does not exceed, that means it's up to 50,000 rupees, then no income from other source. The interesting thing is this, that this calculation should be done separately for each immovable asset. So if you receive 4 immovable assets in a year and their stamp duty value is 40,000 each, then nothing is going to be taxable. So this is not in aggregate. This should be checked separately. So that's a good thing. Separately, we need to check for each property. So if you receive 10 properties having stamp duty value of 40,000 each, then nothing is going to be taxable as income from other source. So if that is without consideration case, but if the case is regarding the inadequate consideration, then things will change again. Now the provision says, if the difference, first of all, it will be applicable if consideration is less than stamp duty value. So if the consideration is less than stamp duty value, then it would be called inadequate consideration. So this is applied. When we will call it an inadequate consideration, when consideration is less than stamp duty value. First point, if it happens, then we will say it's a case of inadequate consideration. And now, if the stamp duty value, now the difference between the stamp duty value and consideration should exceed higher of the following. Let me give you an example. Suppose stamp duty value, in question is giving 1,40,000 and consideration is 1 lakh. So applicability has been applied because the consideration is less than stamp duty value. Now, if it has happened, then point 1 says, find out the difference between stamp duty value and consideration first. So what is the difference of stamp duty value and consideration in my example is 40,000 rupees. Clear? Now this difference should exceed. Higher of the following. So you find out the difference. Now you need to find out these two values, and now we will take the higher of these following two values. First one is fixed 50,000 rupees. Now this difference should exceed the higher of the following 50,000, or it says 10% of consideration. The consideration was 1 lakh, so the 10% would be 10,000. Now 50,000 or 10% consideration, whichever is higher. The higher is 50,000. So now the difference what we have find out earlier, the difference between the stamp duty value and consideration should exceed this. Higher of these two should exceed this. So is it happening that the difference between the stamp duty value and consideration is exceeding or not? The answer is not exceeding. So if it's not exceeding, no income from other source. Suppose I change in this example, I have changed now the stamp duty value to 1,60,000 and consideration is the same. Now the difference is not 40,000. Now the difference between these two is 60,000. The first point will remain the same always. The 10% is also remain the same. That would be 50,000. Now in this second case, the stamp duty value and consideration difference is exceeding the higher of these value. That means 50,000. So now the concept has been applicable. And if so, then the difference would be treated as the income from other source. Other source would be 60,000, not the difference. You need not to find out the excess of 60,000 over 50,000. If this has been find out and if the difference exceeding this value, then whole amount would be income from other source. So this is very interesting. Again, this is again needs to calculate separately for each asset. For each inadequate consideration immovable property you have to calculate this provision for each property separately. Like we can see that this was property number 1 and this is property number 2. So this is not going to be taxable anything, and in this case 60,000 would be your income from other sources. So this was interesting. Okay, that is for without consideration and this is inadequate consideration. Now moving on to other assets. In case of other monetary asset, almost provisions are same as in case of land and building, just having a major difference is only that in this case, aggregate of those 8 assets needs to be checked. What exactly I am trying to say, let me explain you. Now without consideration or inadequate consideration. The first point says FMV of all 8 assets. So if you are receiving any asset without consideration out of those 8 assets, then FMV of all 8 assets in aggregate need to be checked. If it is exceeding 50,000, the whole amount would be income from other source. And exactly same in the case of inadequate consideration. In case of immovable asset, we take the stamp duty value, but in case of other than immovable asset, we will take the fair market value. It says if difference of FMV and consideration in aggregate, again for all those assets, in aggregate exceeding 50,000, the whole amount would be income from other source. Clear? So we will solve our questions, our examples, MCQ in that or in those MCQ, you will understand how to calculate these provisions. Okay. So let's moving on to the provision. So we have discussed the gift provision, and after that, now we are moving on to our amendment provisions, which has been introduced. Very interesting also. Now these are the amendments, and we are going to discuss the amendment for income from other sources. There was no amendments in PGBP already included, no under capital gain. Now this is income from other source. And let me tell you, we have discussed the provision regarding this amendment that has been already been discussed in our notes. Let me show you that also. So the clarification is what we are going to discuss over here. The basic provision already has been included in the notes, what we have discussed earlier in the normal live class. That is over here. Point number 8, that is sum received, an amount allocated by way of bonus under a LIP other than the ULIP plan and Keyman insurance policy. So these are the provision for which now the clarification and the question has been provided by the CBDT. So we would be able to understand how to solve these kind of questions. So everything has been mentioned in the notes earlier also. But now we are going to discuss the provision with the help of examples. This is the provision which has been already discussed in the notes. And it says, if you receive consideration from a LIP policy other than ULIP and Keyman insurance policy, then deduct exemption can be claimed under section 1010D, but there are some restrictions and conditions. What are the condition restriction we are going to discuss? Section 1010D provides for exemption of the sum received. Exemption of sum received under a life insurance policy, including sum allocated by way of bonus on such policy, subject to the condition. What was the condition? That the annual premium should not exceed 10% of the capital sum assured. So you can claim the exemption if your annual premium does not exceed the 10% of capital sum assured. If it is exceeding that, the exemption would be denied. So the provision is already discussing over here again. In case where an assessee has a single life insurance policy, if you have only single life insurance policy other than ULIP and Keyman, then the provision says exemption section 1010D would not be available. Earlier, there was only one condition, that it should not exceed 10% of capital sum assured. The second condition also been inserted, that your premium should not exceed 5 lakh rupees in a previous year. So earlier it was only for the percentage on capital sum assured, but as well as now there are two conditions, that your premium should not exceed 10% of capital sum assured and it should not exceed 5 lakh rupees also. So if either of the condition has been violated, then forget about the exemption. Okay. So exemption under section 1010D would not be available with respect to any life insurance policy other than ULIP issued on or after 1/4/23. So if any life insurance policy has been issued before 1/4/2023, in that case, if there is a policy before 1/4/2023, in that case only that 10% of sum assured limit is applicable. If you satisfy this condition, you can get the exemption. But if the LIP policy has been issued on or after 1st April 2023, then two conditions would be applicable. So before 1/4/2003, one restriction. On or after 1st April 2023, two restriction. Clear? So this point talks about it. And now the additional condition is, if the amount of premium payable exceed 5 lakh for any of the previous years, so would not be available. If the premium amount is exceeding, then exemption of 1010D would not be available. Clear? What if you have multiple insurance policy? So in case where an assessee has multiple life insurance policy other than ULIP, now it says that no policy should have premium exceeding 10% as well as, same condition, 10% as well as 5 lakh rupees. And if any policy, you have three policies, so if any of this policy violate this condition, any of these condition, then the consideration received for that policy would not be eligible for exemption under section 1010D. So suppose these two policy insurance premium does not exceed 10% and does not exceed 5 lakh. So these two policies consideration can claim the exemption of section 1010D, but this policy suppose premium is exceeding 5 lakh. So that policy consideration cannot claim the exemption under section 1010D. We have multiple examples for this, so do not worry, we will discuss all these examples over here. Okay. And because it's my intuition that I believe that out of this example, definitely out of this provision also, there would be question in your examination in January 2025 at least. So please solve all these examples with me. Revise this provision because there's a new amendment. So new provisions are at most important for your examination as always. Okay. So in a case where premium is payable by a person for more than one life insurance policy on or after 1/4/23, always check out the date in the question. If the policy has been issued before this date, only one condition is applicable. After this date, two conditions are applicable. So please check the date first, okay? And the aggregate of premium on such life insurance policies exceeding 5 lakh for any of the previous year, including the term of such LIPs, exemption 1010D would be available. If the policy is aggregate, suppose it's 2 lakh, 2 lakh and 4 lakh rupees, or 2 lakh, 2 lakh and 6 lakh rupees. So in aggregate, if it exceeding 5 lakh, then only those policies are eligible to get the benefit of exemption. Those premium does not exceed 5 lakh rupees. If all of these policy premium is 6 lakh, 6 lakh, 6 lakh, then no exemption for the consideration for any of the policy. So at the option, so if the aggregate exceeding 5 lakh, then you have the option at the option of the assessee whose aggregate premium payable does not exceed 5 lakh. So if the aggregate of three policies premium exceeding 5 lakh, then you have the option which policy exemption you want to avail. Only for that policy, that's individual premium does not exceed 10% and 5 lakh rupees. I believe that there will be confusion when we are discussing these provisions because the language is very technical and confusing. But when we will solve the question which has been prescribed by the CBDT, you would be able to understand that how easy these questions are. Okay. However, to get the exemption under section 1010D, the condition of annual premium not exceeding 10%, that is also applicable. So, because in point number 1 and 2, you are just reading that the condition is 5 lakh rupees. So in the end, they are clarifying that in the each case, 10% condition automatically applicable. That is not going anywhere. Exemption in case of death of a person. In case of death, if we are receiving the payment from any insurance policy, life insurance policy, then exemption would always be available. These all other provisions which has been mentioned are irrelevant. In case of any sum is received on the death of a person, exemption would be available irrespective of the premium, etc. whatever. Now, problem was earlier there was notification only regarding this amendment. There was no guidelines has been prescribed by the CBDT. So now in case any difficulty arising in giving effect to the provision of this clause, the CBDT may issue guidelines for the purpose of removing the difficulty with the previous approval of the government. So now they have taken the approval. Now the guidelines has been there to understand the implication of these provisions because language was not so clear. So now you can see the CBDT has, with the approval of central government, White the circular issued the following guidelines in respect of LIPs. There are two situations has been mentioned in this case. No sum of any nature, including bonus, such sum hereafter referred as consideration, is received by the assessee on any LIP which are issued on or after 1/4/2003. Those will be called eligible LIPs during any previous year preceding the current previous. So situation 1 is saying that we are dealing firstly with that situation in which you are receiving the consideration first time in your previous year. So your previous year is 2023-24. So the first case is saying that the consideration should be received only in the 1 year, not earlier year. So we are receiving the consideration first time. Suppose you are paying the insurance premium for 23-24 from 1st April 2023. And the question says you received the consideration in 2029 and 30 for rupees 10 lakh. So these kind of cases we are dealing. We are not dealing with these kind of cases that some consideration has been received in 2028, 29 and some in 2029 and 30. So consideration year should be only single year. So if it is these cases when consideration has been received earlier also, and now there must be some consideration in some other year and some in the year, some later year. So if there are two kinds of consideration in two different previous year, then situation 2 would be applicable. Situation 2 provision will be given later. In situation 1, we are discussing only those cases in which consideration is going to be received in a single year and there is no previous consideration has been received. You will understand when you will solve the numerical with me, okay? Being the previous year in which consideration is received and its taxability is being examined. So only 1 year provision in which consideration has been received and examined has been given in the question. It should not be like this, that consideration has been received in 2930, tell about the taxability or exemption, and in which this information has also been given that some consideration has been earlier also received. So these are second situation. But now we are discussing situation 1, that means only consideration received here need to be examined and there is no previous consideration has been received earlier or received on such eligible LLPs in an earlier previous year but has not been claimed the exemption. Or even if it's received, then no exemption has been claimed. In such a situation, the exemption under section 1010D would be determined as under. So either there would be no consideration received earlier or even received, then exemption has not been availed. Only those cases going to be discussed in situation number 1. The provision says, if the amount of premium payable on such eligible LIPs does not exceed 5 lakh for any of the previous years during the term of such eligible LIP and annual premium does not exceed 10% of actual capital sum assured. Both conditions should be satisfied. In that case, such consideration would be eligible for exemption under section 1010D. So if the premium does not exceeding 5 lakh and does not exceed the 10%, then you can claim the exemption under section 1010D. If the amount of such premium exceeding 5 lakh or 10%, then you cannot claim the exemption of that consideration. So we are now discussing with the help of an example. Now you can see date of issue of policy is 1/4/2013. Date of exemption, just a second. So date of issue is 1/4/2013. Annual premium has been given 6 lakh rupees. Sum assured was 60 lakh rupees. And consideration received as on 1/11/2023 on maturity is 70 lakh rupees. And note is saying the assessee does not receive any consideration under any other eligible LIPs in earlier preceding year. So this is our first year in which we are receiving the maturity value of 70 lakh. Now the question asks whether this is going to be exempted or taxable on the basis of the information given above. So what should be your answer? Whether this 70 lakh is going to be taxable or not? I'm waiting for your answer. Why not, Pooja? Sujay is saying exempt, Pooja is saying not. Why not? Not eligible LIP. Why not? Because the premium payment is not exceeding 10%. That condition has been fulfilled. But what is the other condition that is not fulfilled? That's why it's not eligible for exemption. Yes. Sujay is saying exempt, not eligible LIP. Arun is saying because exceeding 5 lakh rupees. Now, Arun, this is exactly what I said in my previous classes and in even this classes. You should read the provision carefully. I've just said you that these provision would be applicable on policies issues 1/4/2023 or after. I have said you this thing that always check the date, whether the policy issue is before 1/4/2003 or not. This is the first thing to check in a question. Or now you can see this is 1/4/2013. Pooja is correct. Well done, Pooja. So this is from before 1/4/2023. So only 10% provision would be applicable. That your premium should not exceed 10%, and premium does not exceed 10%. It is exactly 10%. So exemption would be there. Clear? So you should read the question firstly. Okay. Always learn from your mistakes. That is very, very important. एक बड़ी interesting event है. I believe that maybe आप में से किसी को पता होगा. Once what happened, there is our greatest cricketer, Mr. Sachin Tendulkar. Okay. He was playing against Australia, and there was a bowler in Australian team that was Brad Hodge. It's a leg spinner, Brad Hodge. He out the Sachin Tendulkar, and he out him first time. And when Sachin Tendulkar was going to the pavilion after getting out, there was a picture clicked by a cameraman in which Sachin Tendulkar was walking away and the Brad Hodge was celebrating. So that picture is got by the Brad Hodge. He took that picture from that cameraman and went to the Sachin Tendulkar and asked him to sign it, because that was kind of a memorable moment for that bowler to take a wicket of Mr. Sachin Tendulkar, the greatest. And when Sachin Tendulkar signed that, he wrote on that photograph, "This will never happen again." That means that with the signature, Sachin Tendulkar signed and write it down that this will never happen again. And you know what happened? After that match, almost 300 or 350 balls faced by Sachin Tendulkar against that bowler. And that bowler was not able to get the wicket of Sachin Tendulkar again in his career. So that was not just a statement which has been made by Sachin Tendulkar. He must have made this statement, and he must have done a lot of practice on his weaknesses, on the mistake what he done when he got out against that bowler. So he must rectify those mistakes in by way of practice, etc., that he did not repeat that mistake again. So he was that confident in Tendulkar that I am going to write it down that this is not going to ever happen again. And he worked on it. So please do not repeat your mistakes. Doing mistakes is a different thing, but do not repeat it. That is going to be definitely dangerous for your examination. So first thing is need to read the details of a question in detail. So that was a year. If you miss the year, your answer will be wrong. Even when you know the provision, if you did not read the question properly, you might not going to solve the question correctly. Okay. That was question number 1. Moving on to question number 2. Here is the answer. I will upload this suggested sheet also on the portal. The consideration received under LIPA would be exempt under section 10(10)(d) in assessment year 24-25, since annual premium does not exceed 10%, because only 10% condition would be applicable, because the date is 1/4/2023. From that date, this 5 lakh condition has been applicable. Okay, no issue. Moving on to example number 2. Example 2 say, date of issue is 1st April 2023. Now this is the policy on which both condition applicable. Annual premium is 5 lakh. Sum assured is 50 lakh. Consideration received is 52 lakh rupees. So what would happen? He can claim the exemption because both condition has been fulfilled, no condition has been violated. So he is eligible to get the benefit of exemption. Now, example number 3, I will not show you the solution. Now, date of issue is 1st April 2023. Clear? Annual premium is 6 lakh. Sum assured is 60 lakh rupees. And consideration received on so and so is 70 lakh rupees. So what should be the answer? Whether it's taxable or exempt? Now the both condition applicable, 5 lakh and 10%, and you can straightly see that the condition of 5 lakh has not been fulfilled. So this exemption cannot be claimed. That is going to be taxable. Multiple examples are there for your clarification. So I've told you that it's my intuition that might be this kind of question could be asked in your examination. Now example, situation number 2. So that was single policy question in which you have only a single policy. Now we have a question of you have multiple policies. If you are paying premium for more than one life insurance policy, then it should not exceed 5 lakh or 10% in aggregate also. 10% condition would be applied separately and 5 lakh condition should be checked aggregate. And if it is exceeding, then only on those policy in which the payment is not exceeding 5 lakh rupees is eligible for getting this exemption benefit. Okay. The provisions we have already discussed. If the aggregate of the amount of premium payable on such eligible LLPs does not exceed 5 lakh for any of the previous year during the term of such eligible LIPs, and the annual premium is less than 10% of actual sum assured, such consideration would be eligible for exemption. Okay. If the aggregate of the amount of premium is exceeding 5 lakh, then such consideration would not be eligible, of course, for the purpose of exemption. Clear? If it is exceeding, then we have to say only those policy consideration can get the benefit. Those premium does not exceed 5 lakh rupees. Let's see. With the help of this example, date of issue, first thing to check first is date of issue. Both are on or after 1/4/2023. The premium is 3 lakh, 2 lakh. That both premium does not exceed 10%. That's a good sign. And this is 3 into 5 lakh, not exceeding 10% and not exceeding 5 lakh. So what is the correct answer? Both could be exempt or not? The correct answer would be both could be exempt, because in the aggregate that is not exceeding 5 lakh and the percentage condition also has been combined. So both should be exempt. Exactly this kind of question could be asked in your examination. Okay. Next is example number 5. Kindly read it down. Okay. Read it and then we will solve it. What is the correct answer of example number 5? Read out the dates of issue. Okay. Annual premium is 450 and this is 550. This is not exceeding 10%. This is not exceeding 10%. But now you can see that A premium does not exceed the 10% as well as the 5 lakh. Ayushi is correct. Sujay is also correct. Arin is also correct. Pooja is also correct. A will be exempt and B will be taxable. B is going to be taxable. Why? Because its individual premium amount which has been paid is exceeding rupees 5 lakh. Well done. Moving on to example number 6. Now you can see when we were discussing the provision of this section initially before trying these questions, you might be feeling this is a very difficult provision. We are not understanding the language. But as soon as we are solving the question, now you must be feeling how easy this concept is. And now after solving these questions, if you are again going to read the provision and the specific section, you will able to understand exactly what the section, the provision wants to explain. This is the benefit of practicing. This is the benefit of solving numerical, that you will understand the theoretical provision more exactly, more clearly. Now moving on to example number 6. Kindly read it and tell me the correct answer. Very simple. Pooja is saying A and B exempt. A exempt. Sorry, wrong answer. Okay. Sujay is saying A, B would be exempt, I guess. Arin is saying A, B exempt. A and B are exempt. and C is taxable. Very well done. Of course, A and B would be exempt because they are fulfilling both conditions. 10% as well as 5 lakh. So in aggregate, the premium exceeding 5 lakh rupees. So if the aggregate exceeding 5 lakh, then we will check only those policies can get the benefit of exemption. Those individual premium does not exceeding the 5 lakh. Even their aggregate is also not exceeding 5 lakh. You can see 350 and 1, that is 450. So the aggregation also not exceeding the 5 lakh rupees, so they can get the exemption also. So if you have more than two policies, then only those two policies can the benefit. Those premium does not exceed 5 lakh rupees in aggregate. Next is, now this is very interesting question. Rate of issue annual premium is 550, 1 lakh, 350, 6 lakh. Sum assured we have consideration received as on so and so, but we do not get any exemption earlier. In this case, X, A, B, C. So they're saying AB, Pooja is saying AB, Arinjan is saying AB. बच्चों मैंने कहा था डेट सबसे पहले चेक करो. You should check the date first. It is 1st April 22. That means only 10% condition is applicable in this case, not 5 lakh one. So you might have seen this and you have answered that this is not going to get the benefit of exemption. No. This X is satisfying the condition of 10%. So it is also eligible to take the benefit. So it could be exempted. It would be exempted. In this case, again, the 10% and 5 lakh condition fulfill can get the exemption. Can get the exemption, cannot get the exemption. This is going to be taxable. Next is situation 2 is now comes into the force. This is situation 2 that we are going to discuss. So we'll do one thing. We will discuss the situation number 2 after a short break. So Mr. Bhargav, can we go for a short break? Thank you. Welcome back, everyone. So I believe you are having your tea, coffee, etc. So now we are discussing situation number 2. Sujay is asking something. Sujay, what if A plus B, suppose 3.5 plus 2.5 is 5.5, then what will be exempt consideration issue date? In that case, 3.5 and 2.5, the most beneficial exemption would be claimed by the assessee. And in the situation 2, you will see these kind of question in which there are multiple policies from which the aggregate is exceeding 5 lakh rupees. So we have two views over there, like alternative views also there. And we will discuss these kind of question in situation number 2. Just wait. Okay. Now, very interesting question. I am going to ask all of you. Situation 2 is saying consideration has been received by the assessee under any one or more eligible LIPs issued on or after 1st April 2023 during any previous year preceding the current previous year. Now, situation was the circumstances in which you were getting the amount only once. So this was the first year in which you are getting the consideration amount. It was not earlier received or earlier claimed. But now situation 2 talks about those conditions in which you are receiving amount and asked to be the computation, the taxability has been asked for the year. But there must have been the earlier receipt also. So in that situation, how we will solve the question? What exactly the question is talking about, situation 2 is talking about, situation 2 is saying, suppose the question says that you have received consideration in 2029 and 30. In normal questions, we are discussing the provision of taxability and exemption for the only 1 year in which consideration has been received. Situation 2 is talking about, suppose if they are asking that consideration received in year 31, 32, and they are asking the taxability or exemption, but in the question that has been given that you have earlier also received consideration, suppose in year 30 or 31. So this situation is going to be dealt in situation number 2. In situation 1, there was only one cases in which the amount received, and we have to find out the taxability of this year only. So the provision is talking about if aggregate amount of premium payable on such eligible LIP and the earlier exempted eligible LIPs. So triple E LIPs means earlier exempted eligible LIPs in this paragraph. So in this situation number 2, the taxability is going to be asked for some year of consideration, but before that year of consideration for which the taxability is going to be asked in the question, there is some earlier receipt also there for some earlier year in which that exempted LIP's consideration has been received. This is the difference between situation 1 and situation 2. So if aggregate amount of premium payable on such eligible LIP and earlier exempt eligible LIPs does not exceed 5 lakh for any of the previous year, during the term of such eligible LIPs, an annual premium exceeding does not exceed 10%. Consideration under such eligible LIP would be eligible for exemption if that is not exceeding 5 lakh in aggregate. If aggregate amount of premium payable on such eligible LIPs or exempted earlier eligible LIPs exceeding 5 lakh rupees for any of the previous year during the term of such eligible LIP, then consideration under eligible LIP would not be eligible for the exemption under section 10D in case of single LIP. In case of multiple LIP, when you have more than one LIPs, if aggregate of the amount of premium payable on such eligible LIPs and exempted earlier eligible LIPs does not exceed 5 lakh rupees for any of the previous year and that 10%, then consideration receipt would be eligible for exemption. But This is the interesting case, last one. If aggregate of the amount of premium payable on such eligible LIPs and eligible exempted earlier LIPs, 5 lakh for any of the previous year during the term of such eligible LIPs, consideration in respect of any of those eligible LIPs whose aggregate amount of premium along with the aggregate amount of premium of exempted earlier eligible LIPs does not exceed 5 lakh for any of the previous year during their term would be eligible for exemption under section 10(10)(d). For example, 8, 9 and 10. Now my question is this. You can see example number 8 over here. That is date of issue is given, annual premium is given, and consideration now you can see has been given twice. The treatment of consideration, there are two consideration received, 1 and 2. In earlier question, what we have solved, there was only one time consideration received. So in these situation too, we are dealing with those cases in which consideration also has been received earlier. This is called eligible earlier exempted LIPs consideration. The first one. This is the second for which we need to find out whether it should be exempted or taxable. So in this example 8, you are seeing that consideration has been received in 2 years. But in example number 7 also, there was consideration received in 2 years. This question we also solved, example number 7. This is for those situation number 1 example in which consideration has been received once only. But you can see in example 7, those belong to situation 1 is also having twice consideration received, which should be from situation 2 only. So why in situation 1 question consideration 2 time received when this should be the part of our situation number 2? Can anyone find out the difference in this? What is the difference between example number 7? Why example 7 in situation number 1? Even when the consideration has been received twice. So when consideration has been received twice in 2 different years, that should be the part of situation number 2 provisions. Then why example 1 is the part of situation number 1? Pooja has given the answer. Very well done, Pooja. Anyone else? Triple E LIP in situation 1 itself exceed 5 lakh? No. No, Om Krishnan, there's something else. Pooja is saying yes, Pooja, you are correct. Ayushi is also correct. Very well done. Very nice. You can see the difference is the date of issue. If the date of issue is on or after 1st April 23, and if in those policy there are two consideration in 2 years, then situation 2 would be applicable. But in this case, you can see the consideration of this policy is for a policy which has been issued before 1st April 23. So for that purpose, it would form part of situation number 1. Very well done. Those have find out the difference. Congratulations to all of you. So now example number 8. So I just explained you the difference when you need to apply this provision and when you apply situation number 1. Now this is example number 8. We need to find out the policies. Those need to be exempted or taxable. Read the question. We have date of issue. Annual premium we have. Sum assured we have. Which is going to be exempted. We need to find out which policy need to be exempted in this case and which is going to be taxable. Now you can see the difference of date of issue. One belongs to 1/4/2003 and these are belongs to 2024 on or after. Okay, so the correct answer is this is going to be exempted. This is going to be taxable. This is going to be taxable. This is going to be taxable. When you aggregate the premium, you need to aggregate the premium of this also with these policies. So you might be aggregating, you are treating this individually. No, if the policy has been issued earlier, that premium need to be included for all these policies. So you can see, even if you are including X and A, it is 5,50,000. Even if you are including X and B, it is exceeding 5 lakh. And C is individually exceeding 6 lakhs. So this 4,50,000 policy is going to be exempted because this was the first policy. So suppose these ABC is not there. X is the single policy on 1/4/2023. And this is fulfilling both condition 10% and 5 lakh. So there was aggregate payment of premium is 450 only. So this can claim the exemption. When you take a new policy on 1st April 2024, the 10% condition has been fulfilled, but in aggregate is 450 and 1, that is 550. So you cannot take the exemption of policy A. When we talk about policy B, now 450, 1 and 150 in aggregate, exceeding 5 lakh, you cannot take the benefit. And you can see C is individually 6 lakhs. So even if you aggregate it, this condition is not being fulfilled. So these all three policies are taxable. So these are very interesting example. Eligibility, the consideration under LIP X would be exempt under section 1010D in previous year 33-34 since the annual premium does not exceed 5 lakh and also does not exceed 10% of actual sum assured. In this case, the aggregate of annual premium for LIP A, B, and C, along with the premium of LIP X, exceed 5 lakh during the term of these policies. So all of these policy X, A, B, and C aggregate exceeding 5 lakh. Even if you individually take X and A, it is also exceeding 5 lakh. The aggregate of annual premium for LIP A and the X also exceed 5 lakh. Consequently, the consideration received under LIP A, B, and C would not exempt the section 1010D in assessment year 35-36. So all are going to be taxable policies. Fine. Next is let's example number 9. Read it carefully and then answer. Pooja, I guess you all are muted. You cannot ask your question verbally, so you can ask via chat box. Fine. In this example, of course, X is exempted because it's fulfilling both condition 10% and 5 lakh rupees. There is no issue. But now A, B, and C aggregate is exceeding 5 lakh. So technically, if we'll see the combination with X, AX, and A, this is 4,50,000 rupees. So A could get the exemption if it wants. So the consideration because receiving in the same year for all of these three. So if X and A aggregate is 450, so A could get the exemption of 24 lakh rupees, option 1. Either you can apply for the exemption of X and A because both aggregation is not exceeding 5 lakh rupees. So you can opt for exemption of A. you have one more choice because the consideration has been received together in the same year. So you can go for the exemption of X and B because the aggregate is up to 5 lakh only. So you can get the benefit of X and B also. In this situation, you would be able to exempt 38 lakh rupees exemption. C is going to be taxable anyway, so you can take the benefit. X is going to be exempted, C is going to be taxable. The fight is between A and B. If you aggregate X and A premium, it would be 450 and you will get the exemption of 24 lakh. You cannot get the benefit of A and B both because in that situation, these three value exceeding 5 lakh rupees. So either the combination could be X or A or X or B or X or C. C is not possible, already exceeding. So it could be X or A or X or B. So which is the more beneficial, you can take the benefit or exemption of that. And you can see this is 38 lakh, this is 24 lakh. So better to claim the exemption of 38 lakh rupees. Understand? So in this case, X would be exempt, C would be taxable, A would be taxable, and B would also be exempt due to the maximum beneficial. We have to take the benefit of maximum beneficial. Pooja is asking, sir, please explain example 8 solution in Hindi with difference. Okay, Pooja. एग्जाम्पल 8 देखो भाई, ये जो सिचुएशन 2 है और सिचुएशन जो 1 है उनमें डिफरेंस क्या है? सिचुएशन 1 में सिर्फ वो पॉलिसीज इंक्लूड की गई जिनका रीपेमेंट 1 अप्रैल 2023 या उसके बाद की पॉलिसी है और उनका रीपेमेंट जिस ईयर में आ रहा है उसी ईयर का टैक्सेबिलिटी का प्रोविजन हमसे पूछा जा रहा है। जैसे अगर एग्जांपल हम देखें पुराने वाले जो भी सिचुएशन 1 में हमने करे, आप अगर ध्यान से देखें तो एग्जांपल चाहे वो सिंगल पॉलिसी हो या मल्टीपल पॉलिसी हो, कंसिडरेशन एक ही बार में आया है। ये तो पुरानी पॉलिसी थी। एग्जांपल नंबर 2 में आप देखें कंसिडरेशन एक ही बार आया है, एक ही साल में, उसी का आपसे पूछा जा रहा है इम्प्लीकेशन। एग्जाम्पल 3 में भी एक ही बार आया है। एग्जाम्पल नंबर 4 में मल्टीपल है लेकिन कंसिडरेशन एक ही ईयर में आ रहा है। ठीक है। एग्जाम्पल नंबर 5 में भी मल्टीपल है, कंसिडरेशन एक ही ईयर में आता है। एग्जाम्पल नंबर 6 में भी 3 पॉलिसी है बट कंसिडरेशन एक ही में आ रहा है। और 7 में 2 में आ रहा है लेकिन उसमें ये फर्स्ट वाली जो पॉलिसी है एक्स ये पुरानी है, लेकिन जो 1 अप्रैल 2023 है उसके बाद की पॉलिसी है उनका कंसिडरेशन एक ही बार में आया है। क्लियर बात 7 तक की। सिचुएशन 2 ये कहता है कि वो वाली लाइफ इंश्योरेंस पॉलिसी जो 1 अप्रैल 2023 या उसके बाद की है, अगर उनका कंसिडरेशन चाहे वो सिंगल पॉलिसी है या वो मल्टीपल है, अगर उनका कंसिडरेशन जिस साल का आपसे टैक्सेबल ट्रीटमेंट पूछा जा रहा है उससे पहले भी आ चुका है और एग्जेम्प्ट हो चुका है, तो उसका ट्रीटमेंट सिचुएशन 2 बताइए। सिचुएशन 2 में आप एग्जांपल देखें अब 8, वेदर मल्टीपल हो या सिंगल हो। जो 8 वाला है इसमें एक पॉलिसी है एक्स वाली जो 1 अप्रैल 2023 की है। अब ये 23 की है जिसका कंसिडरेशन पहले ही आ चुका है 2033 में, और अब जो है वो दूसरा वाला आ रहा है, ये भी वो पॉलिसी है जो 1 अप्रैल 2023 है उसके बाद है। तो आपसे पूछा जा रहा है कि बताइए कौन सी एग्जेम्प्ट होगी कौन सी टैक्सेबल। तो एक्स वाली तो एग्जेम्प्ट होगी बिकॉज वो 23 की है और उसने 10% और 5 लाख वाली कंडीशन पूरी कर दी। लेकिन जब आप ए बी या सी में से ढूंढेंगे कि कौन सी एग्जेम्प्ट होनी चाहिए, तो हमें देखना है कि जो एग्रीगेट कंसिडरेशन है उन पॉलिसीज का जो 1 अप्रैल 23 है उससे बाद वाली है। 23 से पहले तो 5 लाख का कंसेप्ट ही नहीं लगता। ठीक है। तो 23 है उसके बाद वाली पॉलिसी का एग्रीगेट हम चेक करेंगे अमाउंट ऑफ प्रीमियम पेड। तो आप देखें एक्स और ये दोनों को मिला दूं तो ये हो जाएगा 5,50,000, मतलब 5 लाख से ऊपर हो गया, तो एग्जेम्पशन ए को नहीं मिल पाएगी। अगर हम एक्स को और बी को मिला दें तो ये हो गया 6 लाख रुपीस, इसको भी एग्जेम्पशन नहीं मिल पाएगी एक्स के साथ। अगेन जो सी है उसका इंडिविजुअली ही 6 लाख है तो उसको भी एग्जेम्पशन नहीं मिल सकती। और 23 के बाद वाले जो तीनों हैं उनका भी मिला के 5 से ऊपर है, सो इवन देन इन दैट सिचुएशन दे कैन नॉट क्लेम द एग्जेम्पशन। इसीलिए सिर्फ एक्स को एग्जेम्पशन दी है, हमने ए बी और सी को एग्जेम्पशन नहीं दी। फॉर एग्जाम्पल 9 करने के बाद आपको ज्यादा बेटर समझ आएगा कि क्या हुआ। एग्जाम्पल 9 में आप देखें तो फर्स्ट 423 वाली का जो प्रीमियम है वो है 2,50,000, तो हमने इसको एग्जेम्पशन दे दी। क्लियर। अब जो सेकंड वाली है 1 अप्रैल 24, इन दोनों का प्रीमियम अगर हम जोड़ेंगे तो वो आएगा 4,50,000। तो मतलब आप ए को एग्जेम्पशन दे सकते हैं बिकॉज पेमेंट उसका 24 लाख एग्जेम्प्ट हो जाएगा। लेकिन सेम बेनिफिट बी भी ले सकता है क्योंकि वो है 250 और एक्स भी है 250, तो इन दोनों का भी मिलाकर होता है 5 लाख रुपए, तब तक एग्जेम्पशन रहती है। तो बी भी एग्जेम्पशन के लिए एलिजिबल है एक्स के साथ मिलकर, वो एग्जेम्प्ट होता है तो 31 लाख रुपीज का एग्जेम्पशन का बेनिफिट मिले। सी को तो बेनिफिट मिल ही नहीं सकता क्योंकि वो इंडिविजुअली खुद ही 6 लाख है। तो अब इन दोनों में से किसी एक को एग्जेम्पशन हम दे सकते हैं, वेदर इट्स ए और बी। सो बेनिफिट है बी को एग्जेम्पशन देने में, उससे हमें ज्यादा एग्जेम्पशन अमाउंट का बेनिफिट मिलेगा। आई होप इट्स क्लियर। ओके पूजा। ओके नेक्स्ट आते हैं हम एग्जांपल नंबर 10 पर। ऑल्टरनेटिव मेथड इट्स नॉट रेलेवेंट, हम बेसिक मेथड के अकॉर्डिंग ही आंसर निकाल रहे हैं जो हमारा मेन मेथड है। ओके यू कैन स्किप द ऑल्टरनेटिव मेथड। नाउ एग्जांपल नंबर 10। So now we have two policies of X and Y. This is for 1/4/2023, and then we have 24/24/24. Consideration has been received thrice, in 33, in 34, and in 35. Read the provision carefully and tell me the answer. Okay, Sujay is saying X and Y. You can see that X is exempted because 23 10% condition fulfill as well as 5 lakh condition fulfill. This is going to be exempted, not a problem. Y is also going to be exempted because again 10% condition and aggregate is now 4 lakh. So this is going to be exempted. Now the fight is between A, B and C. So whether A, B or C, any one of it can get the exemption or they are all going to be taxable. So A is going to be taxable, B also and C also, because now it's already 4 lakh rupees. Even if you consider A, it would be 6 lakh rupees in aggregate, no exemption. Again, if you consider B with these two, X and Y, it would be 7 lakh, no exemption. 6 individually exceeding 5 lakh rupees, so no exemption can be claimed for A, B or C. Okay, here's the answer also. If you want to read the specific provision theoretically, you can go through it. Alternative method is alternative, leave it. Okay. Clarification on GST component, you can go through it. Clarification on premium of term life insurance, this is regarding the death while insurance policy. In case of death, there is no restriction. You can get the exemption irrespective of the condition whatsoever has been given in the question. One more clarification for you. Manner of computation of taxable income from LIP under section so and so. It says where any sum is received. So in the above provision, we have find out what LIP is going to be taxable or what is going to be exempted. So from the above insurance policies, what we have discussed, if those fall in the taxable category, then how much amount is going to be taxable? This has been explained over here. So these are interconnected. So in the above provision, we have just seen which policy is going to be exempted in a section 1010D and which is going to be taxable. So if your policy falls under taxable LIP, in that case, how it's going to be taxable, what amount is going to be taxable, that is going to be explained over here. It says where any sum is received, including the amount allocated by way of bonus at any time during the previous year, under a life insurance policy other than the sum received under a ULIP or a key man insurance policy, which is not exempted. So that means those policy what we considered in above examples as a taxable policies. We are discussing about those provision. The sum so received as exceed the aggregate of the premium paid during the term of such life insurance policy and not claimed as deduction under any provision of the Act, computed in the prescribed manner, would be chargeable to tax under the head income from other source. Suppose we received 40 lakh rupees as a consideration and it does not get the exemption of section 1010D. So it falls on the taxable LIP consideration. But this full value is not going to be taxable. The provision says out of this, the amount you have paid for LIC premium. Suppose you have paid 2 lakh rupees in year 1 as an insurance premium, out of which you get the benefit of deduction of 150 only. So 50,000 payment has been excess for which you do not claim the deduction or you would not allow the deduction. So that was year 1. Suppose in year 2 you paid 3 lakh rupees as a premium, out of which you claimed 150 as deduction. So out of this, now 150 you did not claim as a deduction. Now suppose in third year, you have paid 4 lakh rupees as some premium, out of which you have claimed 150 as deduction. So balance 250 did not claim as deduction. So now the provision we just read it out. What it says out of the amount received, the amount of premium which we did not claim as deduction under any provision of the Act would be deducted from this received value. So technically what we are going to deduct? These values or the amount of deduction what we have claimed, 4,50,000. Technically both are 450. Okay, year 4 we also taking. Suppose in year 4 we paid 1,75,000 and deduction claim 150. So 25,000 balance. So I'm reading it again and you will understand what kind of deduction we are talking. So the provision says those policies, those are not exempted under section 1010D. The sum so received, is this 40 lakh. As exceed the aggregate of premium paid during the term of such life insurance policy and not claimed as deduction. So the amount of premium which was not eligible or not claimed as deduction under the policy would be deducted from the amount so received. So we are talking about these payment like 50,000 plus 150, that means 2 lakh. Then this 250, 450 and 25,000. So we are talking about 4,75,000 would be deducted and balance is going to be taxable as your income from other sources. This is the rule which has been explained also over here. Accordingly, CBDT has wide notification number, rule number so and so, compute the income chargeable to tax under section 56(2)(13), where any person receive at any time during any previous year any sum under such LIP, then the income chargeable to tax under section 56(2)(13) during the previous year in which such sum is received has to be computed. So in हिंदी ये आप समझ लें कि अगर जो अभी हमने प्रोविजन पढ़े उसमें जो एग्जेम्प्टेड LIC थी 1010D में LIP, उनकी बात नहीं कर रहे, दोज आर टैक्सेबल. उनका जो कंसिडरेशन है उनमें से प्रीमियम का वो अमाउंट डिडक्ट करा जाएगा जिसकी आपने डिडक्शन क्लेम नहीं करी है अंडर सेक्शन 80 और एनी अदर सेक्शन ऑफ द एक्ट. तो सपोज हमने 2 लाख रुपए दिया था, इधर 150 डिडक्शन क्लेम करी तो 50 नहीं हुई, तो 50 इसमें से माइनस होगा, सेम एज 150 ओवर एयर, 250 ओवर एयर एंड 25,000. तो aggregate is going to be deducted. This has been explained over here with the help of certain things. Where the sum is received for the first time under the LIP during the previous year, first previous year, A minus B. What is A? The sum or aggregate of amount received. That means our 40 lakh rupees is A. What is B? The aggregate of the premium paid during the term of the LIP till the date of receipt of sum in the first previous year that has not been claimed as deduction under any other provision of the Act. So that amount is going to be deducted from the amount received. And where the sum is received under the LIP during the previous year subsequent the first previous year. And if you receive that amount again, then it's about C minus D. C is the sum, whatever you received again, that is your C, and D is whatever you have claimed as deduction except that amount. Earlier you have claimed deduction of 4,75,000. Suppose total was 10 lakh for which we did not claim the deduction. 475 we have claimed over here. Then 5,25,000 can only be deducted again. This deduction cannot claim again when you again going to receive the consideration in some other year. That's a general rule. You cannot claim the same deduction twice. So you can only deduct that amount which has not been claimed earlier. That has been explained as the meaning of D. The aggregate of the premium paid during the term, the LIP date of receipt of the sum in the subsequent previous year, not being a premium which has been claimed as reduction under any provision of the Act, or is included in the point number B or D in any of the previous year. So the fresh amount which has not been claimed as reduction could be or will be deducted from the amount received in the subsequent previous years. So that was the amendment for income from other source, what we just discussed. Let me tell you, these are very, very important for your examination. I believe most of students are not aware about these amendments. They might know the provision, but until otherwise you are going to solve these questions, let me tell you, you won't be able to solve the numerical in the examination, etc. So these are very, very important assignment. I will upload these provisions also on portal, so you can go through with the provisions. Okay. So now moving on to our MCQ for income from other source. Very simple topic, and most of the questions are you can answer easily within a 10 or 15 seconds, of course. So this is our moment of truth. Let's see. So question number first, very easy question. It will revise your concepts once again. Okay. Winning from lotteries, etc., are casual income. Ayushi is saying, sir, if possible, upload that sheet with your working on site. Okay, I will save that sheet and I will upload with that my working, whatever I have done on the notes. Okay, I will upload both the fresh sheet also and that one also on which I have worked out, because might be due to my working, you might not be able to see some spellings or something. So I will upload in both ways. So the question number one, winning from lottery, etc., casual income, and hence very simple. बच्चों गलत मत बताना मेरे को इसका आंसर. Okay. Of course, winning from lotteries or casual income is going to be fully taxable. The correct answer is option number D. Well done. Question number two. Rakesh acquired an air condition for 30,000 from his friend, non-relative, when FMV of the motor car was 50,000. Sorry, both must be same. Let me change the question. This should be motor car. Okay. The amount liable to tax nil. Why nil? What is the reason of that? In this example, the amount taxable is nil. Why? Sujay is saying D not exceeding 50,000. Sujay, I have told you that in the question, in this inadequate consideration or without consideration question, you should firstly check whether this is an asset which falls in the definition of other sources provision. No, car does not include in those movable asset definition. The jewelry, shares, security, bullion, archaeological collection, any work of art, etc. Car does not include it there. So your answer is right because the option is D is saying nil. But if suppose if I change the value to now 3 lakh and this is 150 Suppose I have done this now 3 and 150. So now your answer would be C or it would be A because exceeding 50,000 then full value is going to be taxable, or in education case the 150 is going to be taxable. So please read the question first, and in case of these gift cases the first thing is to check whether that asset fall under the definition of those asset or not. Okay. Okay. Now ABC transferred a residential house held as stock in trade in books by way of first time allotment to Mr. Ankit for a consideration of 15 lakh. The stamp duty value being 17 lakh on 11/12/2023. What will be the taxable amount in the hands of Mr. Ankit? What is the correct answer, students? मेरा नाम है भाई, ठीक बता देना please. Because we are talking about residential house, immovable property. The provision is that if the SDV exceeding the consideration, then the difference should exceed the higher of following. Higher of following is 50,000 and the second is 10% of consideration, which would be in this case 1,50,000. So it would be 150. How is much the difference between the sale consideration and STV? It is 2 lakh rupees. So my difference should exceed this. So technically, this is going to be taxable. The correct answer is B. The difference correct answer is B. ये क्या question पूछ रहा बच्चे? एक second. कौन है भाई? Just a second. Shoaib is asking, but as per section 194B, income from gambling, lotteries, crossword puzzle, is it exempted up to 10K? Shoaib, it is exempted for TDS purpose. For deduction of TDS, the exemption is there, but that is not that these are exempted from tax. These are 100% taxable. Even you cannot get the benefit of basic exemption from these income. So 194B is for TDS purpose only. The TDS would not be deducted. But it doesn't say that it is exempted income. That is 100% taxable. Okay. Okay, now question number 4. ABC transferred a residential house held as stock in trade in books by way of first allotment to Mr. Ankit for a consideration of 16 lakh. The stamp duty value being 12 lakh on 11/12/2023. So what could be the correct answer? What would be the correct answer of those? Sujay is saying D. Okay. Why D? Because stamp duty value not exceeding the consideration. In this example, consideration is exceeding the stamp duty value. So if the consideration is exceeding the stamp duty value, then the gift provision does not applicable. So the correct answer is D. Next. ABC transferred a residential house by way of first allotment to Mr. Ankit for a consideration of 15 lakh. The stamp duty value being 19 lakh rupees on 11/12/2023. What will be the taxable amount? The correct answer is, of course, question number 5 is C, because again that stamp duty value exceeding consideration. Now the difference between stamp duty value and consideration is 4 lakh rupees. So now the higher of the following, this difference should exceed the higher of the following. 50,000 is the fixed value and the consideration was 15 lakh, so 1.5 lakh. Higher is 1.5 lakh. This difference exceed this. So the difference is going to be income from other sources. Where a closely held company receive any consideration for issue of shares, which is the correct answer. What is the income from other source? Where a closely held company receive any consideration for issue of shares. Let me complete this question. I guess this is incomplete. What would be income from other source in following case? So if a closely held company receive any consideration for issue of share, what would be the income from other sources in following cases? So we have 4 cases in which case it would be considered as income from other source. The correct answer is of course B. If the consideration exceeding the fair market value of share, that would be income from other source. Okay, moving on to some complicated question. A lady received gift worth rupees 1 lakh from her relatives as defined under the Income Tax Act 1961 and 60,000 from her office colleague on her marriage anniversary. What would be the taxable amount in this case? Ayushi is saying A, Arinjan is saying B, Sujay is saying B, Shoaib is saying B. The correct answer is B. Why the B is correct answer? Because gift receipt from relative is exempted. These are not taxable. And gift received on marriage is exempted, but this is not marriage, this is marriage anniversary. So these are going to be taxable. Clear? So the correct answer is 7 point B. Next, 8. Mr. A received old coins worth 1 lakh rupees as gift from his friend on 20th April 23, for which his friend charged 25,000. The amount taxable in the hands of Mr. A would be Om Krishnan is saying A, Arin Jain is saying A. Ayushi is also saying a correct answer is A. Well done, students. Well done. Very good. A is the correct answer. Okay. Akshay received a gift check of 35,000 each on 22nd Feb 2023 from his 2 friends. The aggregate amount chargeable to tax in this case, if any, what would be? It should be. Ayushi is saying B, Sujay is saying C, Ayushi now again saying C. Of course, the correct answer is C, because it's a case of monetary payment we received. And if monetary payment received other than relative or other than the occasion of marriage, etc., and if exceeding 50,000, then the whole amount is going to be taxable. Richa received gift of jewelry. Sir, in question number 5,000 impact. What is question number 7? 5,000. Nagesh is asking. What is 5,000, Nagesh? I didn't understand. So question number 10. Richa received gift of jewelry FMV of which is 3 lakh on 17/10/23 pure from her fiance. What would be taxable amount? So fiance does not include in the definition of relative. So he or she just like a stranger. So in that case, gift received from a stranger and jewelry, which includes in the definition of movable asset. So the correct answer would be 3 lakh. Mohan received a watch worth rupees 60,000 from his cousin grandfather, brother of his grandfather. What will be the taxable amount? Question number 11. Arun is saying A. Om Krishna is saying A as lineal ascendant. Very good. Pooja is saying A. Sujay is saying B. So what I have said that whenever there is an income from other source question regarding gift provision, you should watch it that there is a watch. Does watch fall in the definition of those 8 movable asset? Why we need to check whether it's a linear descendant, ascendant? Why you are focusing on relative? This will come later. First of all, there would be to check whether the asset is definition fulfill or does not. It does not fulfill the definition of asset. So it would be a not applicable or nil case. There is no point to find out the relative or relation, etc. First of all, you have to check the asset, whether it's an eligible asset or not. Okay. 12. On 30th 12 2023, Raju gets gift by a commercial flat from the elder brother of his father-in-law. Stamp duty is 25 lakh rupees. The amount chargeable to tax, you need to tell. So Raju gets a gift of a commercial flat from the elder brother of his father-in-law. So first of all, does father-in-law fall in the definition of relative or not? And the elder brother of father-in-law, whether they include in the definition of relative or not? The answer is no. They does not include a definition of relative. So because they do not follow definition of relative, the correct answer would be A. Elder brother of father-in-law does not fall in the definition of relative. Yes, father-in-law fall in the definition of relative, brother-in-law fall definition of relative, but the receipt from elder brother of father-in-law, so he does not fall in the definition of relative. Next. Rajesh gifted an immovable property for a consideration of 70 lakh. The stamp duty value as on the date of agreement is 90 lakh rupees. Whereas stamp duty value on the date of registration was 98 lakh and 50,000 rupees. Part of the consideration of 34 lakh has been received by check on the date of agreement for transfer of the asset. Now you can see this stamp duty value is everywhere in the Income Tax Act, at least at 3 places. Capital gain, there is section 50C. Then PGBP, you have section 43CA. Now under income from other source, it has a role under section 56, gift cases. So again, now we need to see which date stamp duty value need to be taken, whether it's 90 lakh or 98 lakh 50,000. At the time of registration, it was 9850. The date of agreement, it was 90. And the consideration has been paid by a check. So this stamp duty value would be taken for the purpose of calculation. You can see stamp duty value exceeding the consideration. And the difference is 20 lakh. So now we need to see whether this 20 lakh exceed the higher of the following. The 50,000 or 10% of consideration 7 lakh. Whichever is higher is 7 lakh. Now you can see this 20 lakh exceed this. So the 20 lakh would be the income from other source in the hands of Mr. Receiver, whatever it is. Option number D would be the correct answer. Clear? Next is Agni Private Limited issued equity shares of 10 each at 40 rupees per share. Face value is 10 rupees. The FMV of the share on the date of issue was ascertained as 25 rupees per share. Company issued 1 lakh equity shares. So what would be the income from other source in the hands of Agni Private Limited? The provision says if a closely held company issues shares on a exceeding its the market value, the difference would be the income from other source. So the market value was 25, the issue price is 40, the difference is 15, and the 1 lakh equity shares. So the answer would be 15 lakh. Suppose it's not a closely held company. Suppose it's a widely held company. Then what would happen? The answer would be nil because the provision does not applicable in case of widely held company. Now, 15th question, Mr. Sudeep gives following details for previous year 24-25. Provision says, just a second. Assessment year 24-25. On 1st April 2023, he gets gift of house A from his friend Kishore. The stamp duty value is 6 lakh rupees. What is income from other sources? Very simple. We all know the correct answer would be 6 lakh. That would be B. Next is, these are assessment here, okay? On 3/12/23, he gets gift of house B from Ramesh, who is father-in-law of his elder brother. So what would be the answer in this case? Question number 16. Ayushi is saying A, that is 65,000. Very good. For solving these questions, first of all, we have to check that is it eligible asset or not? Then that relative or exemption case. Then the value. So asset is there, no relation is there, relative does not exist. Now the value. The provision says if it has been received free of cost, the stamp duty value at least should exceed 50,000. For without consideration case, we are talking FMV is irrelevant in this case. This need to be checked. So stamp duty value should exceed at least 50,000 for applicability of this provision. Does not exceed, correct answer would be B. Again, this is not previous year, 24-25, this is assessment year. Okay. On 7/12/23, Sudeep purchased a second-hand car for 70,000 from D. The market value was 3 lakh rupees. So what should be the correct answer? 17. The correct answer is D because it's a car which is not an asset. Clear. Mr. Sudeep gives following detail for again assessment year 24-25. On 14/12/23, Sudeep purchased a work of art for 5 lakh from E. Market value was 530. On 20 December, he purchased jewelry for 7 lakh from F. Market value is 7,25,000. So what should be the correct answer of question number 18? Om Krishnan is saying A. Okay. Sujay is saying A. Shoaib is also saying A. Nagesh Dange is saying D. Pooja is saying A. Ayushi is saying A. The correct answer is, of course, A. Nagesh, it's A because in case of movable asset, we have to find out the aggregate value of these differences. So this is 30,000 first case. In second case, it's 25,000. So total is 55,000. So taxability will be checked in aggregate. Okay. Next. Sudeep gives following detail for previous year, again assessment year 24-25. On 21-12-23, Sudeep purchased a painting for 4 lakh from G, who is a brother of Mr. Sudeep's wife. Market value is 7 lakh rupees. So what should be the correct answer of question number 19? So technically, G is brother-in-law of Mr. Sudeep, and that is included in the definition of relative. So if we receive anything from relative, so that means other source provision does not apply. The correct answer would be D. Well done. Sudeep gives following details for previous year 24-25, that means assessment year. Purchased a commercial property for rupees 20 lakh from Mr. H. The stamp value is 90 lakh rupees. Sujay is saying purchase. So purchase means inadequate consideration. So whenever you did not pay the full market value, that is also a case of a gift. If you are getting something, the value is 1 lakh rupees and you are getting that thing in 70,000. That means 30,000 is the gift part. So that is called inadequate consideration and it is included in the definition of income from other sources. Okay. So Sudeep purchased a commercial property 20 lakh. The stamp duty value is 90 lakh. So if you will apply the provision that stamp duty value exceed the consideration, now the difference is 70 lakh. We should see, does it exceed 50,000 or 10% of the value, whichever is higher? Yes, it does exceed. So 70 lakh would be your answer. 21. Mr. Sudeep gives following detail for assessment year 2025. He gets gift of 100 preference shares in A Limited from J. The stock exchange price or FMV is 45 rupees each. Let me change this question. What is the correct answer to this question? We can consider this price as a FMV price. The correct answer will be B, nil, because total value is only 4,500 rupees. Individually, it's less than 50,000 FMV, so we cannot tax it. 22, last question. Following information for assessment year 24-25. On 25/1/24, Sudeep gets a gift check of 1 lakh from his friend L on his birthday. On 21st January 24, minor son of Sudeep gets a gift check of 55,000 rupees from elder brother of Sudeep's grandfather. So what would be the treatment of these provisions? Question number 22, what should be the correct answer? I'm waiting for this question correct answer. Let's see. Sujay is saying A. Pooja is also saying A. Okay. Ayushi is saying D. Very interesting. Mr. Om Krishnan, what is your answer? Mr. Shoaib, where are you? Ayushi Mehta is saying D. Hmm. What is the correct answer? Anybody else? Okay, Shoaib, Om Krishnan, nobody has given the answer till now. Om Krishnan is saying A. Arin also not give the answer yet. Okay. So the correct answer is option number C. How? This 1 lakh is going to be taxable. The first one is 1 lakh is going to be taxable. Minor son gets the amount of 55,000. This is also going to be taxable because that does not fall in the definition of relative. But you forgot because that's a minor son, so there is an exemption under the chapter clubbing under section 10, I guess 32 or I guess 34 is there. So minor can get the exemption if the minor income is going to be clubbed in the hands of a parent, then they can get the exemption of 1500 rupees or the amount of income whichever is lower. So in that case, Mr. Sudeep would get the benefit of 1500 rupees exemption. So the taxable amount would be 1,53,500. So the correct option is option number C. So whenever you find something different in the question, so is this minor sign? Minor son is there. So that should click in your mind that why minor son provision has been given in the question. Why? So is there some provision? That's why I need to change my answer because minor son having the different taxability provision that you must have gone through with the provision of clubbing topic. Clear? In question 20, Om Krishnan is asking something. Mr. Sudeep purchased a commercial property, that means a immovable property, for rupees 20 lakh rupees from H. The stamp duty value is 90 lakh, Om Krishnan. So is the property has been received by us for inadequate consideration. So if it's an inadequate consideration, then we need to find out the difference. The difference would be compared with the value, and higher is going to be compared with the difference. If it is exceeding, then 70 lakh is going to be taxable. What is the confusion in this question? Batao? What is the confusion? Simple. If you have any confusion, let me know. I will explain in detail. Pooja is asking, sir, if employer give gift of 80,000 marriage would be exempt or taxable? It would be fully exempted. In case of marriage, nothing could be taxable. So whether it's employer, whether it's anyone else, but if it is on the occasion of marriage, then it would be exempted completely. Okay. And generally, it's 5,000 exempt in case of we receive gift from employer, but in case of marriage, that would be completely exempted. So we have discussed the provision, MCQs, the new amendment concept we have also discussed. So if there's any query, kindly ask me. Our next class would be on 2nd of November after Deepavali. So have a safe and enjoy Deepavali. All the best and good wishes from my side to you. Happy Deepavali to all of you. I'm waiting. If there's any query, you can ask me. Question number 7, Mr. Nagesh wants to know. Nagesh, you can scroll back, but chalo, bata dete. Question number 7. What was that? A lady received gift of rupees 1 lakh from a relative as defined. So relatives' incomes are exempted, Mr. Nagesh. So that could not be taxable. 60,000 from office colleagues on her marriage anniversary. Gift received on marriages are exempted, but this is marriage anniversary, which is different from marriage. So gift received on marriage is going to be taxable because the value exceeding 50,000 rupees. As simple as that. Any other query? Ayushi Asir, is that ADG of the sheet is available for the person tax section 15 BAC? I'm not understanding what exactly you are asking. Pooja sir asking, sir, unabsorbed depreciation in section 35, unabsorbed capital expenditure can be carried forward anytime after, even though business have been closed, but sir, after that, we set off it against other head in that year? No, we cannot set off from any other head of income because that carry forward unabsorbed depreciation can be set off from any other head of income except salary and casual income. So even if business has been shut down, but you can carry forward and set off the unabsorbed depreciation from any head of income except casual and salary. Do not worry. In our 2nd of November class, I guess that is for clubbing and set of provision, you can ask me this query and I will answer that query in detail with the example. So that would be really good if you'll ask these kind of query in the respective heads of it. So I guess there is no more query. So students, have a safe Deepavali. Happy Deepavali to all of you. We will see each other on 2nd of November. So Mr. Bhargav, can